And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Some days are better than others. Some days are more exciting than others. And some days, you just have to sit back and say we celebrate and we honor. So National Medal of Honor Day, March 25th, recognizes all Medal of Honor recipients. Highest military award for valor in the United States, and was created in 1861. We do thank every one of our men and women serving in the military, so thank you. And those who have received a Medal of Honor, I guess it's a multiple gratitude. Since its creation, 3,468 medals of honor have been awarded to the country's soldiers, sailors, airmen, Marines, and Coast Guardsmen. I guess it's too the Space Force is probably too new to have any medals of honor so far, but 3,468. When you think about it, so this started in 1861. That's about 150 years, give or take. So 3,468 in that many years. Very, very small group of people that have got that. So we honor them. Thank you for your service. We appreciate you. And having beaten anorexia, National Lobster Newburg Day. So I did have a call. I have a nationwide mastermind call that we're on 6:30 in the morning. Our friend Hammer is the leader of that. He talks. We can chime in through chat on there. But he thought that this was a bougie thing from the West Coast. Lobster Newburg coming from the West Coast. Okay. It's an American seafood dish. Lobster Newburg includes lobster, butter, cream, cognac, sherry, eggs, and cayenne pepper. Delmonico's of New York debuted Lobster Newburg in 1876. Oh, we got a lot going on from the 1800s today. So I didn't even know Delmonico's was around that long ago. Sea captain by the name of Ben Wenberg developed the elegant and rich dish after he demonstrated the recipe to restaurant manager Chris Delmonico. Chef Charles Ranhofer made refinements, and they added the creation to the restaurant's menu. So, have you ever had Lobster Newburg? Have you ever had Lobster Newburg? Josh, have you had that? Like it? Yeah, it's really good. I might have to see if anybody's serving it today. Hey, Steven, over there at the Tartan Room, are you going to have Lobster Newburg today? I don't know if that's on the menu. I might have to harass them a little bit. Let's see what the markets are doing today. So, it looks like a pretty good day in the market right now. Dow Jones Industrial Average up 340 points. The NASDAQ up 156. S&P 500 is up 41. Oil. Yeah, we like this. This is a good sound right now. We've got oil is down $2.14 a barrel. Yahoo! Yeah, we like seeing that. So maybe they're going to finally get things settled out in the Middle East. Iran says that that they want their terms for a ceasefire. Let's see, you're getting the crud beat out of you and you want to set the rules for the ceasefire? Maybe you want to set the rules just to live to see tomorrow. And you see what's going on right now. Do you think that? So I think I saw that the 82nd Airborne is on their way over there. We've got some amphibious units on the way over there. Have you ever seen the amphibious units? I was down in Carlsbad and right there by Camp Pendleton. And they had the amphibious units doing a display on Harbor Days when we were down there one time. And it was just fascinating watching these guys come ashore. And all you can say when you see these units, thank goodness they're on our side. Because holy cow, they're you don't want to mess with them. And I'm just throwing it out there. My thought is, do you think that maybe that's what's going on with Iran right now? They're seeing all this force. They've already got all these ships out there. And yes, I am a patriot, so I loved seeing the commentary just recently. Did you see the commentary from our Secretary of War that we are sharing the sea with Iran now with their Navy? So what does sharing the sea mean in Navy terms? Well, they get the bottom half. Yes, that was the commentary from our Secretary of War. Yeah, I don't think I'd want the bottom half of any of that. And then did you see John Brennan just recently? I mean, that guy's such a liar. I mean, we know that he lied in a lot earlier, and that's already been documented. Yet any station that puts Brennan on, you have to question everything they do because they're basically telling you that the information they're sharing is not worth anything. So I listen to him and say, what a waste of a breath. But that is a whole different story. Let's see. Oil prices, gas prices. This one's painful. Yeah, I think I got the wrong button right there. $5.83 a gallon of gasoline. Josh, did you get hit by that coming out here? Yeah, I bet. Well, along the road, I guess it's probably bet it's higher than that. So you got to be if you're getting on the road at all, you better be strategic. Now, you don't want to go to the airport because they got the lines now. I saw an article that Orange County Airport and Los Angeles Airport, the lines aren't as bad. But did you see Atlanta? Holy cow! 5 hours they're waiting there. I saw somebody on the news. They actually brought a chair with them because they're standing in line so long. They brought a cheap chair and they said, something, they're just going to leave it. Think about that one. Now they're going to have to hire more people to clean the trash in the airports. And Chuck Schumer basically said, well, we're not going to do anything about it because we want reformed ICE. So they're going to leave the people at TSA not working. Now, Friday, they're going on vacation. They go on a 2-week vacation from Congress. I would just say that, and they had the one congressman that I think John Kennedy put something out saying that he wanted to, if the Department of Homeland Security was not getting funded, senators shouldn't get paid. And he wanted it done based on unanimous consent. One senator walks in, says, I consent, and walked out, wouldn't debate anything. You got to love how the Democrats work right now. It's just amazing to me. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Got a great broadcast lined up for you today. More sellers relisting. We'll talk about it. A 50-point credit score jump can save you $40,000. Whoa. You can't control what's happening with mortgage rates, but we can tell you what you can control. And you're one bad day away from broke. We're going to give you some insurance moves to fix that now. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 0186945.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app, and every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payments. Mixed market yesterday. Conventional 30-year fixed, 6.402. That was up. Jumbo 30-year fixed, 6.513. That was down. FHA 30-year fixed, 6.149. That was up. VA 30-year fixed, 6.055. That was up. And the USDA 30-year fixed, 5.947. That was down. If you want our thoughts about the market, each and every business day morning as early as the data allows, rsrlinks.com/HBOD. That's our Ron Siegel Radio community, and it's free to you. rsrlinks.com/HBOD. And let's take a look. Here's calculators. We didn't even talk about the calculators. If you want to know what your principal and interest payment will be, if you want to know how much you can qualify for, just a rough number, you got to call us to get a real number, an exact number, but you can get a rough number. It's all in the calculators that we have available for you for free, rsrlinks.com/calculators. And if you want to know what's going on in the markets this morning, well, let's talk about that right now. The S&P 500 is up 39.61. The 10-year Treasury, that one is down 4 basis points. We like to see that 10-year Treasury going down. That's good news. Yeah, I wonder what happened. I guess all my sounds are off here, so I'm running in the dark here. I can't hear a thing, so we'll see what happens with the sounds that are going on, but maybe you guys can hear me. Josh will tell me if he's hearing us, but then again, I'm looking at a different screen. So we've got that, let's see, let me go back here, and yeah, okay, so we did see the 10-year Treasury down, and I was able to hear that. Josh, are you still hearing us okay? You hear me? Okay, Josh hears me, so hopefully you're all hearing me. Let's see, what's driving the market? Not a whole heck of a lot. There is when I look at the economic calendar for today, the only thing of any note is going to be coming out at 10 o'clock, right as we go off air, is a 5-year note auction. Now, yesterday we had a 2-year note auction. Did not go well. And that's kind of what spurred the market to go on the wrong direction for us. The bond market dropped a lot, which is kind of what you saw there. Not a lot of news going on, but it's been a roller coaster in the markets. Lots of volatility based on news surrounding the Iran-U.S. conflict. While there have been a lot of down days, today both stocks and bonds are rallying while oil prices are lower on the heels of some optimistic news pointing to a potential resolution. U.S. sent Iran a 15-point peace plan delivered by Pakistan, which markets are responding to. The New York Post reported that President Trump said Iran has agreed to most important part of the peace deal, that it will never have nuclear capabilities. While Trump says they've agreed, it remains unclear whether Iran will actually comply. Adding the optimism was comments from China's foreign minister, Wang Yi, who urged his Iranian counterparts to engage in negotiations as soon as possible with the U.S. to end the war. Lastly, Iran said that non-hostile ships can cross the Strait of Hormuz, but only on their terms. This means that there is likely some flow going through, which is positive. Now, if you're listening to the lame media, you're probably hearing that, oh, Iran said that they're not negotiating with the U.S. Well, technically that's true, but you have to remember, what is the legitimacy of it? So the technicality, yeah, they're not negotiating with the U.S. because Pakistan is in the middle handling the negotiations. They're the mediators. So Iran talks to Pakistan, Pakistan talks to us, we talk to Pakistan, Pakistan talks to them. So we're not really talking to each other. We've got this intermediary, and Pakistan has said that they would do the negotiate, or they would host a face-to-face. Now, let me ask you something. Just watch some of these things, and if you watch just the numbers, don't even listen to any of the commentary. So the number of missiles and drones coming out of Iran is down about 90%. Does that sound like they're winning the war? You just got to listen to them. That's the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And again, look at the data. What is the data telling us when we look at the bond market? And generally, the bond market is considered where the smart money goes. Stock market is riskier money. Bond market is generally smart money. It's more conservative. And when you look at some of these different issues, you can basically say, okay, with the 10-year treasury down 4 basis points, 4.32, and there is an important level of support at 4.33. So if we stay, or level of resistance, I'm sorry. So if we stay below that 4.33, that'll be some good news for us if we can close below there. Because once a level of support that gets broken then becomes a level of resistance going the other direction. So we're watching that very, very closely, because there's a lot of room for us to move down till we get to the 50-day moving average at 4.179. Again, those are all that sounds technical, but it does it in the absence of data, technicals really are what runs the market. So that's kind of what we're looking at right there. Now, as we watch all these things, what does this mean to you? And I shared this on a call this morning, and I share this with our private clients. If you're buying a house and you can qualify for whatever the loan is that you're trying to get on that property, don't worry as much about the interest rate as we would in normal instances. And I know the biggest question I get all the time, what's the rate, Ron? And if you've listened to us for any length of time, if you watch our commentary, Josh even has a banner for us. It says strategy beats rate always. Strategy beats rate always. So we know as we get closer to the spring selling market, which we're, maybe another month or two, it's going to really heat up. And hopefully we'll be done with this conflict in the Middle East by then. What's the strategy when I say strategy beats rate always? Well, if you can qualify for the interest rate that you're at now, and I know according to Mortgage News Daily, about 6.5%, national average, not a offer to lend. And I think Josh told us earlier on the screen that he had on, I think that according to OBMMI, they were saying that interest rates, let's see, on a 30-year, 6.4, jumbo was 6.51. So it's close to what Mortgage News Daily is saying. So think about that. If you can qualify there, if you can qualify on those numbers, do it. Don't worry about where the interest rate is. If you've got a decent lender, it's not one of the online services. That's not going to get, they're not strategists. They're order takers, and they just let you do what you want to do. And they're not really showing you. They're not certified liability advisors. So what is the strategy then? Take what you can right now. And if you've got a good lender, they should be able to offer you to restructure your loan in 6 to 12 months. Interest rates should be lower. They can restructure it 6 to 12 months from now and do that at no cost for you. So that's what we tell all of our private clients. is let's look where we are, and we'll do a no-cost refi 6 to 12 months from now. Now, is the no cost the only option that you have 6 to 12 months from now? Shouldn't be, because even then, we have to look at where the market is. Are we increasing? Are we decreasing? Where are interest rates going? We should have a new Fed share by then. So we got all these things going on. So we would take a look at it. And again, even at that time, when we go to do that restructure, strategy beats rate always. Strategy beats rate always. So let's take a look at that time. And we'll say, okay, do we want to do a no-cost refi? Do we want to do a paid restructuring? It's there. Okay, let's go back up one step. Is there a no-cost refi? Well, you can look at it and say it's not going to cost you anything out of pocket. Does that mean there's no cost? Well, I can tell you this. I've never met an escrow officer that works for free. I've never met a title company that'll issue an title insurance for free. Appraisers don't work for free. The government won't let us record a new deed without paying fees. So how does that work? How do you get all these things done if it's no cost? Well, what might have been a, say, 5.5 interest, I'm just doing this as education, what might have been a 5.5 interest rate, well, maybe we go at 5 5/8, 5 3/4. So there is that's where the cost comes in, because you build it into the rate that then what the overage is, it's called a rebate. That's been used to pay all these folks that get paid, services that get paid, third-party fees that get paid, the government that gets paid. All of that is getting paid through the interest rate. Now, if we see interest rates are still on a downflux, and you're saying, hey, I can lock in a $300 a month savings right now, we have systems we have programs in our systems that will just flash on my screen. Call Mr. and Mrs. Jones, because they can save that $300 or $400 that they wanted to save, and they're in good shape. Now, why would you do that if you think interest rates are going to still go lower? Very simple. It's locked in. No one has a crystal ball. Take what you can get when you can get it, and maybe you need to do it again in another 6 to 12 months. See what the market is doing. That's why I say strategy beats rate always. Strategy beats rate always. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, more sellers are relisting. 50-point credit jump can save you 40 grand and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Did you try to sell your home last year and it just didn't work out? Maybe the offers weren't where you needed them. Maybe the timing felt off. Maybe you just got frustrated and said, forget it, I'll wait. If that's you, I want you to know something. You were not alone. A record number of sellers pulled their homes off the market last year. It happened all over the country. But here's what's interesting. According to Redfin, roughly 40% of those sellers have already relisted their homes this year. And that number is growing every single day. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. So let's talk about what's happening here, because I think it matters a lot more than people realize. When you pull your home off the market, it's usually not because you changed your mind about selling. Most of the time, life still requires that move. The job transfer is still happening. The kids still need a bigger yard. The empty nesters still want to downsize. The reason for selling did not go away. The market just wasn't cooperating. And last year, that was a real thing. Rates were bouncing around. Buyers were cautious. Some sellers had unrealistic expectations about what their home would fetch. And when reality didn't match, they hit pause. I get it. Nobody wants to feel like they're leaving money on the table. But here's the part that people miss when they pull a listing. When your home sits on the market too long and then disappears, it sends a signal. Buyers notice, agents notice. And when that home comes back, there's a question mark hanging over it. What was wrong with it? Why didn't it sell? That stigma is real, and it can actually cost you more than if you'd adjusted your strategy the first time around. Now, the good news, if you're one of those sellers thinking about jumping back in, the spring market is historically one of the best windows to sell a home. Buyer activity picks up. People want to be settled before summer. Families are making decisions around school calendars. There's an energy in the spring market that you just don't get in November. But here's what I'd tell you. Don't just relist the same way you did before. If the first attempt didn't work, something needs to change. And I'm not necessarily talking about your price, although that might be part of it. I'm talking about your entire approach. Let me give you an example. I had a family reach out to me not long ago. They had their home listed for about 90 days last year. Good home, good neighborhood, reasonable price, but it just sat there. They pulled it off the market in October, frustrated. When they came to me, the first thing we did was look at their exposure strategy. How is the home being marketed? Who is actually seeing it? Were the right buyers even finding out about this property? And in their case, the answer was no. The marketing was thin. The exposure was limited. Once we rebuilt the strategy around getting maximum visibility to the right buyers, things looked completely different. That's why I always say selling a home isn't just about putting a sign in the yard and hoping for the best. It's about positioning. It's about making sure your home gets in front of the right buyers who are actually looking for what you have. If you're thinking about relisting, or if you're selling for the first time this spring, I want you to do two things. First, go to rsrlinks.com/salesmax. That's rsrlinks.com/salesmax. That'll walk you through how we approach seller exposure and pricing strategy. And here's something a lot of people don't know. Our real estate partners at Ron Siegel Radio have the option to get every listing promoted on television. On top of that, our ad platform generally gets a home in front of 30 to 50,000 people on social channels in the first 10 days. Think about that for a second. That's not putting a sign in the yard and crossing your fingers. That's putting your home in front of tens of thousands of real estate people fast. If your home sat on the market last time with limited exposure, this is a completely different conversation. Go to rsrlinks.com/HSG. That's rsrlinks.com/HSG. It stands for Home Seller's Guide. Whether this is your first time selling, you're giving it a second shot. This guide lays out the steps you know exactly what to expect and how to prepare. And don't forget, we've got the report card on the agents everywhere within the sound of our voice. Look, 40% of the sellers who pulled their homes last year have already decided to get back in the game. That tells you something. The reason for selling haven't gone away. The spring market is giving people a real opportunity, but this time do it with a plan. Do it with the right strategy. Don't just hope for a different result. Build one. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Real-Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com. Let's see. I think we've got your Credit Matters segment today. being brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. A 50-point difference in your credit score can cost you over $40,000 on a mortgage. $40,000. Same house, same income, same you. Just a different number on a screen. And the worst part, most people have no idea that number is wrong or that they could fix it in a matter of weeks, not years, weeks. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. You know, I had a family sit down with me on Zoom call not too long ago. Good income, steady jobs. They wanted to buy a home, and they assumed they were in great shape. When we pulled their credit, one of them was sitting at a 620, the other was at 680, and they had no idea why. They were making their payments. They weren't behind on anything. So what happened? Well, it turned out they had a few things working against them that they didn't even know about. High credit card balances relative to their limits, an old collection from a medical bill that they thought was paid, and a bunch of hard inquiries from shopping around for a car loan the wrong way. Sound familiar to anyone listening right now? Here's what most people don't realize. Your FICO score is built on 5 factors, and each one carries a different weight. Payment history is the biggest. That's 35% of your score. Are you paying on time? Every time? Because even one late payment can sit on your report for 7 years. 7 years, that's not a misspoken. The second biggest factor is how much you owe compared to how much credit you have available. That's called your credit utilization ratio, and it makes up 30% of your score. So if you've got $10,000 in available credit and you're carrying $8,000 in balances, that's an 80% utilization rate, and that is killing your score. The experts say you want to be under 30%. I'd say get it as low as you can. And here's something most people have never thought about. It's not just how much you owe, it's when your balance gets reported. Your credit card reports your balance to the bureaus on or about your statement closing date. So even if you pay your card off every month, if you're carrying a high balance, when that number closes, that's the number the bureaus see. The trick is to pay your balance down before your statement closing date, so a lower number gets reported. We put together a whole resource on how to time your credit card payments for maximum FICO impact. Go to rsrccpayment.com. That's rsrccpayment.com. It's a small move that can make a big difference in your utilization ratio. Now, here's another tip that most people miss. You can actually ask your credit card company to raise your limit. If they bump you from $10,000 to $15,000 and you still owe $4,000, your utilization just dropped from 40% to about 26%. You didn't pay off a dime, but your score could go up. Smart, right? The age of your accounts matters too. That's 15% of your score. So that old credit card you never use, do not close it. Keep it open. Use it for a small purchase once a month and pay it off. Because closing your oldest account shortens your credit history, and that hurts your score. Your credit mix counts for about 10%. Lenders like to see you can handle different types of credit. A mortgage, a car loan, a credit card. It shows you can manage various kinds of debt responsibly. And then there's new credit inquiries. That's the last 10%. Every time you apply for a new credit card or loan, it puts a hard inquiry on your report. A few of those add up fast, and they'll tell lenders you might be overextending yourself. So what do you do with all this? Let me give you the quick action list. First, pull your credit reports. You're entitled to a free copy of each of the CRE bureaus every year at annualcreditreport.com. Look for errors. Look for accounts you don't recognize. Dispute anything that's wrong. I have seen people pick up 20, 30, even 50 points just by getting errors removed. Now, annualcreditreport.com does not show you your scores. You have to pay for that. rsrlinks.com/FICO. rsrlinks.com/FICO. You can see your scores. Again, you have to pay a little bit of money, but you can see your scores right there. Second, set up automatic payments on everything, every credit card, every loan, at least the minimum, because one missed payment can undo months of progress. Third, pay down those credit card balances. Focus on getting that utilization ratio under 30%. If you can get it under 10%, even better. And here's a little trick that a lot of people don't know about. The timing of when you make your credit card payment matters. If you pay your balance bound before your statement closing date, that lower balance is what gets reported to the bureaus. You can check out rsrccpayment.com, rsrccpayment.com for more on how that timing strategy works. Fourth, stop applying for new credit unless you really need it. Every application is a hard inquiry. Be strategic about it. And fifth, if you've got old collections or derogatory marks, don't just ignore them. Talk to the creditor. Ask for a pay-to-delete agreement. That means they agree to remove their negative mark from your report once you pay the balance. Get it in writing. This can make a real difference. Now, here's what I want you to understand. Improving your credit score is not an overnight thing, but it's also not as slow as you might think. Some people can see a 100-point improvement in just a few months by doing the basics right. And here's why it matters so much, especially if you're thinking about buying a home or refinancing. A better credit score doesn't just get you approved, it gets you better terms. It gets you a lower rate. And over 30 years, that difference in rate can mean tens of thousands of dollars. Tens of thousands. That's real money that stays in your family's pocket. So what does this mean for you? It means your credit score is not some number that happens to you. It's a number you can control. And the first step is knowing where you stand right now. Here's what I want you to do. Go to rsrlinks.com/FICO. That's rsrlinks.com/FICO. Check your score. See where you are today. And if you want to take the next step, if you want to sit down and put together a real plan for your financial future, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. We'll walk you through budgeting, next steps, and how your credit score fits the bigger picture of building wealth for your family. Your credit score tells a story. Make sure it's telling the right one. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, you can't control what's happening with mortgage rates, but we're going to tell you what you can control, and you're one bad day away from broke. 5 insurance moves to fix that now. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage 101 today brought to you by, let's see, who we got Mortgage 101 by today. Let's see, it'll pop up here. rsrlinks.com/VA loan. Like that one. We love the veterans. rsrlinks.com/VA loan. You can't control what's happening with mortgage rates, but here's what you can control. Mortgage rates have been volatile lately, and if you're thinking about buying a home, that can make it harder to plan, but there are still things you can do to get the best rate possible in today's market. It starts with having the right information. So what's causing the bumps in rates? And what can you do about it? Let's break it down. Data from Freddie Mac shows the recent volatility. After trending down for well over a year, there was a rise this month. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 or FM 98.1 video feed. We've got a chart for you showing that mortgage rates are experiencing short-term volatility. While it's easy to be distracted by the changes, here's what you need to remember. It's normal for rates to bounce around a bit here and there. For example, if you look back at the graph, you'll see that even within the past year, there have been times like this when rates inched up. We're in one of those moments right now, and you need to be aware of that, especially when there's economic uncertainty or big global events happening. Volatility like this is expected. As Investopedia explains, quote, mortgage rates don't move in isolation. When global events inject uncertainty in financial markets, that can ripple through to borrowing. Mortgage rates can respond quickly to geopolitical developments. As long as uncertainty remains elevated, rate swings may continue, unquote. And that's one of the reasons why trying to time the market isn't a wise move. You can't control what happens with mortgage rates, but there are still things you can do to help you get the best rate possible in today's market. And here's where to focus your efforts. Your credit score plays a big role in the rate you qualify for. Even a small improvement can make a noticeable difference in your monthly payment. As Bankrate puts it, quote, your credit score is one of the most important factors lenders consider when you apply for a mortgage, not just to qualify for the loan itself, but for the conditions. Typically, the higher your score, the lower your interest rates and better terms you'll qualify for, unquote. So make sure you do what you can to keep your credit score up. If you're not sure what your score is or how you can improve it, talk to us. Your loan type. There's also different types of home loans, and each one can have unique requirements, benefits, and rates for qualified borrowers or buyers. The Consumer's Financial Protection Bureau, CFPB, explains, quote, there are several broad categories of mortgage loans, such as conventional, FHA, USDA, and VA loans. Lenders decide which products to offer, and loan types have different eligibility requirements. Rates can be significantly different depending on what loan types you choose, unquote. That's why it's so important to explore your options with a lender. You may even want to talk to multiple lenders to see how the options vary. And that's why we shop with 43 different lenders on your behalf, kind of like a personal shopper. The length of your loan matters too. Most lenders typically offer 15, 20, or 30-year loans. Freddie Mac offers this advice. When choosing the right home loan for you, it's important to consider the loan term, which is the length of time it will take you to repay your loan before you fully own your home. Your loan term will affect your interest rate, monthly payment, and the total amount of interest you will pay over the life of the loan, unquote. Again, to figure out what makes the most sense for your budget and long-term goals, just have us walk you through it. We'll tell that to you. You can also look at our calculators because we've got calculators in there to help with that. rsrlinks.com/calculators. rsrlinks.com/calculators. Think about buying right now. The best advice is to accept that you can't control where rates are going to go from here. What you can do is work with a trusted lender and take steps that'll help you get the best rate possible. So if you want to move today, let's make it happen. We just need to control the controllables and focus where it counts. That's Mortgage 101, brought to you by rsrlinks.com/VA loan, rsrlinks.com/VA loan. Yeah, I think we have time. Borrow Smart segment, brought to you by gethomeselect.com, gethomeselect.com. You just graduated, you got the job, you signed the lease on your first apartment, and you're feeling invincible. I get it. But here's the question nobody your age wants to hear. What happens if something goes wrong? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Today, I want to talk to the younger members of our audience. Maybe you're in your early 20s, late 20s, early 30s. Maybe you're a few years out of school, you're single, you're working, and insurance is probably the last thing on your mind. But here's what I've learned over 4 decades of helping families with their finances. The decisions you make right now in your 20s, when the stakes feel small, those are the ones that either set you up or trip you up for the next 30 years. So let's walk through this together. What does a young single person actually need when it comes to insurance? Let's start with the car. Once you're off your parents' auto policy, you need your own coverage. And yes, it can be expensive when you're young. Shop around, compare quotes, look at your deductible options. A higher deductible means a lower premium, but make sure you could actually afford that deductible. If you had to write the check tomorrow, that's the test. Next up, renter's insurance. And I know what you're thinking. Ron, I don't own anything worth insuring. Really? Add up your laptop, your phone, your TV, your clothes, your furniture. You're probably looking at $10, $15, maybe $20,000 worth of stuff. Renter's insurance can cost you less than a streaming subscription each month. And here's the part most people miss. It can also include liability coverage. That means if someone gets hurt in your apartment and decides to sue, you've got protection. For a few dollars a month, that's a no-brainer. Now let's talk about health insurance. If you're working, your employer might offer a plan. Take it. If they don't, you've got options. Federal law lets you stay on your parents' health plan until you turn 26. That can be a real money saver while you're getting started. After that, you can look at the federal exchange at healthcare.gov or coveredcalifornia.gov or your state's exchange, if they have one. California does. The important thing is, do not go without health coverage. One trip to the emergency room without insurance can set you back thousands of dollars and wipe out everything you've been building. Here's one most young people never think about. Disability insurance. Your single most valuable asset isn't your car. It isn't your apartment. It's your ability to earn a living. If you got hurt or sick and couldn't work for 3 months, 6 months, a year, how would you pay rent? How would you eat? Disability insurance protects your income, and we're young and healthy. It's affordable. Don't wait until you need it because by then it's too late. And then there's life insurance. Now I know you're 24, you're single, nobody depends on your income. Why would you need life insurance? Here's why. Because you'll never be younger or healthier than you are right now. Locking in a policy today while rates are low and your health is good is one of the smartest financial moves you can make. Think of it as buying future protection at today's prices. When you do get married, when you do have kids, when people are counting on you, you'll already have coverage in place. So here's the big picture. Insurance isn't exciting. Nobody posts about their renter's policy on social media, but it's the foundation. It's the thing that keeps one bad day from turning into a financial disaster. And when you're young, everything is cheaper and easier to get. That's the window. Don't waste it. Now, if you're listening to this and thinking, okay, Ron, I need to get my financial life organized, I want you to go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It'll walk you through budgeting basics and the next steps to get your financial house in order. And if you're one of those young renters who's starting to wonder whether it's time to stop paying someone else's mortgage and start building equity of your own, go to rsrlinks.com/FTHB. That's rsrlinks.com/FTHB. And it's specifically for first-time home buyers who are ready to take that next step because renter's insurance is great, but you know what's even better? Insuring something you actually own. And I'm happy to put you in touch with insurance people who I trust. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.